Good day, fellow investors. Lithium stocks are at rock bottom and it's time to update as many of you requested. I've done this analysis 5 months ago saying how the cycle might get much uglier, and that is what has been going on. Many of you around YouTube have asked me to update on lithium to see whether it is a buy now. And just think, if lithium prices, as we'll discuss later, go up just a little bit, if Albemarle hits 120 where it was just a while ago, that's a 2x easy. If it goes back to the previous highs, that's a 6x. So my message has always been to buy cyclical stocks when things look ugly, and now I have to say, in the lithium environment, things look extremely ugly. It looks like the market has capitulated on lithium, prices are going down, things are changing, and let's dig deeper. Here I want to start with my free value investing course that is there with a lot of content if you want to learn more about investing, if you want to follow my value investment strategy and portfolios and research and covered stocks, there is my research platform. But on the free course, this is a video that we have made more than 5 years ago explaining the book from Peter Lynch, One Up on Wall Street, and how he approached investing in cyclicals. And this is key when it comes to investing in lithium. So when there are issues, there is suffering, 50% drops are normal. If you buy at the wrong part of the cycle, you can wait for years before there is an upswing, and timing is everything. Stocks usually decline when peak earnings is reached. When was peak earnings reached? Just 2 and something years ago, when there was a peak boom in lithium. If you watched my video this from 5 years ago, then you would have avoided that crash. So unfortunately, since then the stock is down extremely, and the key question now is whether to buy now. What is the risk and reward? This is what we do on this channel. We'll discuss the company Albemarle to give an overview, the lithium cycle, macro factors and other factors impacting the sector, and then we go about investing. So let's immediately start with Albemarle, the latest investor presentation. And if you look at the thing, they are working, they are still producing lithium, nothing wrong. They have 5.4 billion of sales in 2024. Unfortunately, if you look at margins of 20% EBITDA margins for miners means they are not making any money. So at current lithium prices, they haven't made any money in the quarter, but they are globally diversified, therefore they represent the lithium market, and best to just look at them when it comes to things. Their key strategy is to supply lithium to the global electrical vehicle demand, storage and things like that. And we can see that the market there keeps on growing. Global EV sales are better than they have been in the last 2 years. China especially is the leading point. Europe is equal as it was, and North America also still growing despite the negative sentiment and change away from electrical to drill baby drill. However, if we look at the estimations for growth this year, the company expects between 15 and 40% lithium demand growth in 2025. And this is the first issue. There is a huge difference when it comes to 15% growth and 40% growth in prices. Simply, if 15% growth and supply growth is 30%, prices go down. If there is 40% demand growth and 30% supply growth, prices go up. That's how it works. And then also the long-term strategy here is that electrical vehicle storage and all other things related, robo-taxis and everything, will lead to higher and higher demand for lithium. Therefore, at the current supply levels, the cost of lithium is expected to be more than 20,000 per ton or $20 per kilogram. And at current prices, which are 7, there will not be enough profitable supply for the lithium market, and therefore sooner or later there should be again a boom in the lithium sector. The company has been investing heavily, and now they have reduced it to sustaining productivity, so just sustaining very little growth now. And this is typical for cyclical industry. As prices are low, nobody invests in growth anymore, and therefore in the future simply there is no new cumulative supply, but if demand still keeps on going up, prices boom. They have some debt, but they also have cash. However, in a cyclical environment, this is something very important to watch because there are financial covenants. So they have amended them at a cost likely, but this will be broken, especially as we'll see later with the current lithium prices, as they will go into negative, and then the covenants are amended, things need to have different things and things like that. So this is another issue to watch with cyclicals. These cyclicals would be better without debt. Yes, you limit the future growth, but fortunately also limit the downside. You can see here EBITDA still going well, positive, so if all ends equally, they will have 1 billion of EBITDA, you might say. But still, keep in mind, they also sell on spot, but also on contractual basis. There are no major contracts changing in 2025. Some customers, they are forced to adjust because the customer says, if you don't adjust prices, we will not take them. So this Q1 performance is still from prices 2023-2024, not yet adjusted for 2025 prices. You will see 2025 price adjustments in the net income and the financial statements of 2026. Keep that in mind when it comes to cyclicals. So their target is for break-even free cash flow. However, when they published this, the price was 9. Now you'll see later the price is 6, which is even more detrimental. And therefore, EBITDA was great. They were making great money, great profitability. This is the margins I like for miners. And now this is clear, a downturn in the cycle, and likely will be 0 in 25, all else equal. We'll see. I don't think they will manage to break even on cash flow. Thus, they will need to borrow more, which might create even uglier situations. Let's discuss the lithium cycle. Cyclicals, it's always about price, and prices were hovering around 93,000 renminbi. 93,000, that's around 12,000 per kilo. Now with the prices around 60,000, you can see here that the prices are already below $9 per kilo, going to $8 per kilo, and that is already a huge impact. That's 30% down from the expectations that the company had. And keep in mind, these prices are in line with what Goldman Sachs predicted already 2 years ago. They have been saying that the likely long-term price for lithium is 7,000 per ton, which is still a little bit lower from the current prices. So we might see that the market is still just adjusting to all the new supply that's coming, and Albemarle has been caught a little bit on the wrong foot here. If we go to the CEO, they still anticipate growth of lithium this year. Of course, it's impossible to know what will happen in 2024-2030, but they still stay with their outlook that it will double, demand will double, and therefore prices will need to go higher to incentivize supply growth. However, we are 13, we are now at 9, so already lower. And the question is, what if prices stabilize at 9 and don't go to 20? That completely changes the investment thesis there. I think that price will go below 9 and perhaps even higher than 15 if some things fall into place. So you see here 12 9 year end, perhaps even lower, because you need to ship it and things like that. So with the price decline, maybe we'll see even $6, which will be very, very detrimental for the company. EBITDA zero, negative cash flows. So we'll see how this global demand situation continues, storage, installation, things like that. And there was this great question in the last conference call asking how could you describe this 15 to 40% and how will that trickle down into different scenarios? Their best view is that growth in demand will be in the 20% range, but supply is still adjusted for 30% growth from the exuberance in the past. And that's typical for cyclicals. Some nice questions in the conference call. So what is on the upstream capacity, and then we have to see how will that work, because someone will stop producing. But once you build your mine, it's hard to just start producing because you have a lot of sunk cost and you're trying to get as much cash out as possible. So as long as they can get some millions out, they will keep producing. The thing is, there are some macro factors that are influencing the game here, and also interest rates and other factors. The US economy shrunk, so if that continues, that will trickle down globally, less demand for lithium. And you can see here already the predictions are for lower growth in 2025. If this continues, we might see a recession, higher interest rates, less spending, things like that. And if that happens, that will impact the lithium market with lower prices. There is no question about it. Plus, higher interest rates that seem to persist higher make it more expensive to buy cars, make it more expensive to invest storage, make it more expensive to invest in whatever, and therefore less demand for lithium. So the boom in EV has also passed. There is a new politics in the US, less investments, less green, and the world will adapt to that. Again, less lithium. And I have asked ChatGPT, my great assistant, to tell me, okay, what's going on, what kind of situations are there with the batteries. And you can see here sodium ion is still emerging. So it is also a technology question. How will maybe batteries also switch from lithium to others? Perhaps just take some market share, again, lowering demand for lithium. And you can see here what is the difference, and we'll see still what will happen. Yes, sodium and other tech can replace lithium in certain applications and things like that. So that's something we have to see. When will that be widespread? So 2030 already for sodium, just early use, but these are so fast developing technologies that we don't know what will be the situation in 2030, and therefore this is something I don't know. Actually, nobody knows. So betting on the upside is what it is, betting on the upside. And then also there was this question on cell pack design, things like that. And even the CEO that is betting heavily on the upside says we are still early in the technology curve around lithium-ion batteries and other batteries in the similar space. So early, nobody knows. The thing is that with low prices, there are no cash flows, no money, worthless, especially if there is a technological breakthrough that substitutes lithium. All the money that they have invested is gone. And there were some great questions. Contracts, this you can pause here and read to see how the contracts are working there. Some customers break their contracts, say we are not going to pay those prices. You adjust then, see how it goes. But that is not that straightforward with prices. And as I said, in 2026 you will see what is going on in the market. And then also demand has been fine, it's just been supply, as everyone was flushed with money in 2022, they invested, and therefore there is more supply that also impacts. And if there is just a slowdown from 40% to 10% over a few years, you can see lower prices for a while. This is an issue that I have with lithium, that I cover a lot of commodities on my research platform, and if we check there, if you scroll down to the portfolios. I think Glencore is still on free preview, so that's copper and that's coal, but we touch also on all commodities that I update here and there. But if you go to some other commodities like food, I know that there will be demand for food, fertilizers and things like that. I don't have really such a big technological scare as there is with lithium. On top of macro factors like macroeconomics, recessions, buying cars, interest rates, storage, investments in renewables and things like that, that again impact lithium. Because this is pretty clear. Global population is here to grow. More money, we are going to get likely fatter and fatter. And then you say, okay, if you're going to get fatter, you invest in Ozempic and you do well. However, it's always about supply and demand. What about new drugs that are coming, and you see what can happen there? It's very hard to have a long-term competitive advantage, and if this is substitute, then lithium might go back to the 40,000 price that was standard here on the supply and demand, and that is a huge risk for investors. I know that there will be more demand for copper going forward. I'm looking at coal, oil, things like that, iron ore, watching the cost curves, etc. But I don't know whether lithium will still be in high demand 5 years from now. That's a risk that simply puts lithium out of the value investing question. And that's it. However, if prices just rebound to where they were 6 months ago, Albemarle is a 2x. If prices rebound to here, Albemarle is a 5x. If prices rebound here in the next 2-3 years and Albemarle survives this without too much stock issuance or debt issuance, you can watch a 10x. That is the risk and reward. So it can be a 0, it can be a 10x, and that is something you have to see how it fits your portfolio. As I'm a value investor, I like to sleep well at night. I look for more certainty in those long-term trends. You can check that more on my research platform, and we'll keep updating on lithium. Maybe something will develop, maybe we'll see how the technology progress. I know you will give me a lot of value in the comments as always, and I thank you for that. Thanks, and I'll see you in the next video.